Credit Suisse in Mumbai, where he was the assistant vice president for algorithm trading and prop desk. Finally, now he is an independent consultant and advisor to various financial institutions on algorithm trading, systematic trading. So what is algorithm trading? Sorry? No. How many dealers are there? Algorithm trading is called the next generation trading. What we are doing currently is nowhere what presently the technology has. You see the US market or UK, Europe market, 90%, 90-95% of the trades are algorithm trading. Algorithm trading are basically system-driven trades, which is done by computers, by coding and all. Specific technology is used like high-frequency trades, where in millions of seconds, millions of order hit, with a fraction of a second. Of course, 2008, there are ups and downs are there. If you stay invested for long term, it has always benefited the investor. Now about Rajiv Gandhi equity scheme. The scheme is actually initiated by Government of India for the first time investors. First time investing is not for the existing people who is already having a demat account and they are trading. The first time investors are attracted to channelize their savings to the capital market, and they will be given a one-time deduction of whatever they invest. 50% of that will be given as one-time deduction. Say for example, I invest 50,000 rupees in capital market under Rajiv Gandhi equity scheme. I will get a tax benefit of 25,000, 50% of it. Okay. There are other criteria also. I will explain you on that. Now, under Rajiv Gandhi equity scheme, every script is not available. Only certain government has given permission for certain shares which are included in NSE CNX 100, BSC 100, then public sector unit Maharatna, Miniratna and Navaratna companies. These lot of government companies are there, like SAIL, NTPC, all. So they are all notified by different categories which are called Maharatna, Miniratna and Navaratna. So for example, Miniratna is the Airport Authority of India. It's Miniratna company of government. So they grade themselves like ABC. So these companies who are, if you want to invest in, public sector companies, you can invest in Maharatna, Miniratna and Navaratna only, not any other government companies. Then of course units of ETFs. An investor can purchase units of ETFs like the Nifty ETFs, mutual funds with eligible securities as underlying, and they are listed and traded on a stock exchange. We think that they should be listed on the capital market. Then follow on public offers and new fund offers coming. Any new fund offer is coming. The investor can purchase that, go for subscription, and under Rajiv Gandhi equity scheme. Then IPOs of public sector companies which has 51% of government holding. Main dominant promoter should be government in case a government is giving IPO, and there should be a minimum 3-year annual turnover of ₹4,000. For investor doesn't have to do such calculation. It's for your understanding only, because whatever scripts are available under Rajiv Gandhi equity scheme will predefined and will be available on the website, various websites, SEBI and NSE and income tax also. Actually, how securities are eligible, the criteria for securities is this parameters. Any doubt here? So who is this new retail investor? The new retail investor should not have the salary more than 10 lakhs, gross salary. The people who are below 10 lakhs of their CTC, or gross salary, are eligible to avail Rajiv Gandhi equity scheme. The investor, this new investor should not have a demat account. He should be a new demat account. And suppose if he is having a demat account, the investor, it should not be traded. He is not used. Say a dormant account, which is not being utilized, can be also avail Rajiv Gandhi scheme. And any investor who has opened a demat account before the notification, but has not done any transaction in equity sector till date, till the notification of the scheme is, who is not the first account holder of our existing joint account, demat account. Many investors are there who have joint demat account. Whereas one investor may not be active, he has not opened an individual. Whereas other partner, holder would have done a lot of trading on that. The first one is eligible to avail Rajiv Gandhi equity scheme and open a new demat account. Any doubt you have on this new detail? Yeah, deduction criteria, as I have told you, say advisable common sense if you use, if I invest 1 lakh also, I'll get 25,000. If I invest 50,000 also, I'll still get 25,000. So the maximum advisable is that you can invest 50,000. Investor can invest in 50,000 and can avail Rajiv Gandhi equity scheme to the maximum limit of 25,000 as tax reduction. Because even if you do 1 lakh investment under Rajiv Gandhi, you will still get 25,000. Say for example, now in another scenario, I do investment of say 10,000 rupees in Rajiv Gandhi equity scheme. I buy some shares of 10,000 worth. I get a tax rebate of how much? In 10,000, 5,000, 50%. So that way I can avail Rajiv Gandhi equity scheme, tax benefit through Rajiv Gandhi equity scheme. So advisable is that if any investor wants to invest, he can do 50,000 rupees. Because beyond that, he will not get any advantage. Plus, he will be subject to lock-in period and all. I'll come to the other specification of this scheme. Okay, deduction is only one time for one individual. So if I avail the Rajiv Gandhi equity scheme and I take tax benefit, then I can only do it for a month. I will not continue. For example, for this financial year I have done. In the coming financial year I have done. I have availed tax benefit by investing Rajiv Gandhi equity scheme. Then I cannot do same thing next year also. It's only one time. Clear for that? There is a lock-in period which government has specified. Now whatever shares I buy under Rajiv Gandhi equity scheme, I have to hold it in my demat account for 1 year. I cannot sell it. I cannot switch over it. I cannot buy or sell it. That is one limitation which government has notified. Because the idea behind doing this is that investors should not get carried away, should not do trading, should lose money. Second thing, the money of which should stay invested for long term, at least new money in the system. It should not be like today you bought and within 10 days you sold at 2,000 and you have a tax benefit. So both things will not be possible. So for that 1 year locking period is there. He has to hold the shares till 1 year. Then there is a flexible lock-in period of 2 years where he can switch. He may sell the share and buy another eligible securities, not every security. Now many investors ask that, suppose I am a new investor, I open a demat account. Under Rajiv Gandhi I invest 50,000, I keep it for 1 year. Can I do further trading? I want to buy and sell, I want to do trading also. Apart from what tax benefit I have also. Can I do it? Anybody has the answer? Yes, he can do it. There are two forms. One is Form A under RG, Rajiv Gandhi. There Form A, I declare these securities I am buying for under Rajiv Gandhi equity scheme and I want to avail tax benefit. Now after a few days or after immediately I want to do trading also in a F&O segment or anything. There is a Form B also where he can declare that I am doing trading on a particular number of shares. Just to make bifurcation between the Rajiv Gandhi equity scheme shares and other trading entities. So he can do both. So there is no limitation that he cannot do one. If I avail this, I cannot be a trader or I cannot buy and sell immediately. The only thing under Rajiv Gandhi scheme, the smart investor is the one who will avail both. If I would have taken invested 50,000 rupees to 25,000 benefit. And with Form B, I would have done my trading, my strategies, whatever I do. That way, he can do both. Are we clear on this? Now, of course, if you do not have a demat account, you can approach the trading number, open a new demat account, and automatically in that application form, I think Rajiv Gandhi equity scheme is mentioned, KYC. Is it mentioned? I am not aware of how trading common KYC. How they are mailing separate forms. Form. So that through that you can advise the client to avail Rajiv Gandhi. And of course, people who have a dormant account, they can fill Form A and activate their account, demat account for the Rajiv Gandhi fees. Now, target audience for this Rajiv Gandhi scheme, who is in Bangalore? Yes, all young IT. All these young IT people have a salary package of minimum 3.5 to 5, 6 basic the campus goods. These people don't invest and they pay tax at all. A lot of campaigns and we have also done with members. For example, in Pro campus we have done a lot of sessions for the updating their clients, their employees. A lot of people are interested. In fact, one of the trading members was also a partner. You can also think of something like that. We have to do that. Infosys campus we have provided electronics. A lot of huge response and very good response because especially it started from January and of course this tax time was coming. The right time it came and people were very much interested. A lot of new accounts got opened. That is how Rajiv Gandhi equity scheme is there. So now save more tax on investment in stock market. That is the punchline of Rajiv Gandhi. Any doubt in this?
Tax saving is okay. What about the government prescribed the NEAs and all? It's not moving 1 rupee at all. You just check it out the NHBC, DHEA, yeah, each and everything structs all the Rutlas and NEAs, it is already stacking itself. What about the
But NSE 100 and CSE those things are available. I mean, that is you are right because government doesn't want, to be very honest, that they don't want private companies and all to be used for Rajiv Gandhi scheme. Say I invest 50,000 rupees, suddenly my investment is 10,000. It is something I am gone. Right? So I lost actually 50,000 rupees where if I calculate my tax calculation, a person who is having a salary of 3 to 5 lakhs will get a benefit of 2,500 rupees only when I calculate my tax. And the person from 5 to 10 lakhs will get 5,000. So you can avail deduction will be 5,000. The person, logically I am telling you, because investor I only asked them, if I stay invested for 50,000 1 year, and if something like Satya my parent, 50,000 is gone. What I get is 2,500 rupees of tax. Such risk should not exist. That is why government doesn't want any risky asset or risky shares to be included. Of course, the motive is that to stay invested and buy ETFs, buy Nifty ETF. They have the best product I would say, cheaper also. 1 unit is almost 1/10 price of the index. You can buy 2,000 rupees, you can buy ETFs and keep getting that. Investors are best on that. Has moved. You would have seen how $5,500 to $6,000 has traded. Return is there. And of course, for return, if you are looking at it like intraday at all, you can fill Form B. The motive is that you stay invested in stock market and take incentive for your. This is one of the best way and itself is a big way. No government will give incentive for entire equity investment. Any other doubts? Any more? After 3 years you can see. In the flexible 2 years you can switch over. Say from one script to another script. That movement and all you can do. Ideal thing is that you can advise investors for ETFs. You can go for buy units in 1 year. Things are not okay, then they can move ETF to ETF. Gold ETF is not. Gold ETF again it comes for the commodity.
can go wrong, they will go wrong. Right, so this morning all I've been doing is chasing Murphy's law. Right, got delayed, PPTs are not working, something or the other is going wrong, and that's basically what happens even in the market. Most of the time we anticipate that something will happen, and just the reverse of that starts happening. Right? And more so than important, I think they have chosen a very apt topic this time of systematic trading. Basically, can you come in the front? Here or okay, so let's start with basically why systematic trading first. What are the advantages, what are the disadvantages, why we want to do something like that, and then basically build forward. If you see the Indian market and the way things are changing right now, there's a paradigm shift from what we basically saw earlier or what used to happen earlier as compared to what is happening now. If you see a market like 2003, 4 or 2006, 7 and 8, it was a bull run. Because of the bull run, it was easy to make money. Just go long, make money, go long, make money. But now what has happened is, we're no longer seeing the bull run. It's been like almost 5 years. The market has become completely stagnant. Right? And this phenomena can last for a very long period of time. We do not know how long. There would be bouts of bull market, but whenever we talk to people, still they think that, oh, the bull market phenomena is still there, it's going to come, so maybe we'll wait for that, But we don't know when exactly that is going to happen. Right? And that's one of the reasons why, the way it was earlier easier to make sort of money by just using simple ways or simple strategies or just going long, do not work in the market anymore. Right? What has also happened is the mix of crowd which is there in the market, the kind of participants that we are seeing, even that has changed. Earlier there was a lot of retail participation. Even my father used to invest a lot in stock futures and used to make a lot of money. Today you go and talk to any retail investor. The moment you utter the word stock market, they'll not even attend your phone. They'll probably put their money in real estate or they'll put in gold. But the moment you say stock market, nobody is even willing to listen. Right? And that's basically the way it has happened. Over the years, over the last 3-4 years, people have stopped, working with the stock market. And that's the reason why the retail participation has gone down significantly. Right? Now the retail participation has gone down, and if the volumes have stayed where they have stayed, that means some other participants have come. And the participants who have now come in are mostly institutional players. They are FIIs, mutual fund players, big brokerage houses, and things like that. So, now our sort of fight, if you say that trading is a zero-sum game, somebody wins and somebody loses, our fight now is no longer with the retail participants. As long as it was with the retail participants, it was easier for you to make money. Because they were unaware, we were a little bit aware, we could basically go ahead and fight with them. But today you are standing, or we are standing at a juncture where we have got these institutional players, we have got FIIs, who have got, when they come to fight, they've got machine guns and they've got tanks with them, and they're still fighting with bows and arrows. Right? So we need to find out ways, we need to find out methodologies through which we can upgrade our own skills. Because if we don't, we'll not be able to fight with these people. And more often than not, as and when the market becomes more developed, in the next 3 years, 4 years, 5 years, you will see more of these kind of participants in the market. You will not see the retail participants coming in, as long as there is a bull run. And we don't know when the bull run is going to come. If we a developed country like Japan, it had a beer rally for 27 years, from 1990 up to 2020. So, you can just have a bout which can last for a very long period of time. And if we want to be in the market, we want to, stay afloat, we want to make money, we need to change the way we are basically doing things. Right? Second important factor. We have two kinds of